So in California, we have no inheritance tax. We used to many years ago, but that went away when the federal government stopped the credit on it. Now, in California, you are going to have some tax consequences if you inherit property. You're either going to sell it, you're going to have capital gains on it back from the date of valuation of the date of death, or you're going to rent it out, and then you have tax complications with doing so. Now, the decedent does have final tax returns that need to be filed, depending on how much income the decedent received in the year of death. And then, with the sale of the property or renting out the property, you're going to have estate or trust tax returns, depending on if it's an estate or if it's a trust. There will be tax returns that need to be filed if income is $600 or more in the year. Now, if the estate doesn't do anything, trust doesn't do anything in the year, doesn't have any interest or dividends, and you're holding the property waiting to sell it, there is no filing requirements, but you should take a look into that. So the difference of inheriting property either through an estate, a trust, or in testate, where the person does not have a will or a trust, is exactly the same to the recipient. Now, depending on what you inherit, there could be items that would be taxable when you sell it, which would always be items that are tax deferred, like an IRA retirement type account. But for property, you get the basis as the date of death for the decedent, and then you go forward with that. You need to make sure that you find every nuance of the law to apply it to your client in the best way possible to save them the most amount of taxes. There's black and white areas and gray areas. Some are black and white where you can't do it. Some are gray where you need to make sure you structure it to where you can do it. I have worked on plenty of tax returns that were prepared by others that are weekend warriors doing this profession during tax season, or retired from the profession, and they're not keeping up with their continuing education. So make sure you have somebody that is making sure that they know what all the current laws are, especially with the major changes we have for tax year 2018. But for most people, it's a once or twice in a lifetime thing that they're doing. You're not doing this every day. You need to have a professional to guide you through and make sure that you've crossed every T and dotted every I.